Welcome to the Trading Lounge and the day ahead report, and here we're looking at the S&P 500 on a 15-minute chart, and yesterday we were looking at the 1410 as support here and looking for a consolidation on this support here. This consolidation was picked as a corrective pattern, and being a corrective pattern would be a continuation pattern, continuing in the direction of the trend, and we'll be looking down at 1400 here, so the intraday traders can start counting the 5-wave structure to the downside into this sort of area here. This will be reflected across other markets as well. This is the US 30 here, the Dow. Same thing as well on the 1310 through here, and also for the European markets as well. Yesterday we were talking about the DAX here, using the 72 number here as a retested resistance. Well, the retest is in and it's failing, and that would be the short trade setup there. So if you're looking at that, well, then you could probably use the 71.72 at that stage, the SG2 in there, 65.72 on the 80 there, but new lows to be made below here. And pretty much the same for the UK market as well. The UK market has got its own little correction as well. This is the daily chart here, so we're looking at basically we're looking at an ABC correction across here as such. So the A wave, the B wave's always in 3 waves, so we'll be looking for an ABC like that. C wave is always in 5 waves, so we'll be looking for 5 waves as such like that. It looks like an ABC flat correction, so it won't be coming down too far, but that said, it can pull back down to the right back down through to here, but let's just see how the S&P 500 goes from that point there. So in terms of counting the 5 waves down, we'll be looking at 1, 2, third wave coming in through to here, and still a 5th to come down here. There is a lot of support. Be careful about, you're better off shorting the DAX, because there's a lot of support here at the 5772 there. So just be very careful about that. The Australian market is in a downtrend, as you know, on the 2-hour chart, and what's occurred now is the 4,500 is becoming the retested resistance. So as you know, it was vibrating across here yesterday, and now you can see that it's locking under there further. So with the S&P 500 dropping lower, then we'll see this move down lower as well. Once again, there is a lot of reasonable support at Group 2 here, so perhaps not the best trade, but still it is at resistance through here. Alrighty, let's have a look at the commodities, which are reasonably steady because of the US dollar sitting at 80. Okay, we'll talk about the US dollar a little bit later on, but just for the short term here is that you can see that the US dollar is sticking to the 80 here. That when a market sticks to something, it's actually quite a positive thing. We can count 5 waves up here to complete it at this stage here, but let's just see what occurs here next in terms of support and resistance. But while this is sitting at the 80 here, then obviously that's going to keep commodities reasonably stable. We can see that USDCHF here has opened up higher last night and closed a bit lower, but it's up all the same, so that's why we're considering this being steady, and also so the material sector will be steady, and the finance sector in Australia has been strong and steady, and it should continue that this week. But as was pointed out to me yesterday, the reporting and the dividends will be this week as well, so just keep an eye on those. So we can see that the copper market here is up off its lows on the 2-hour chart here, and the wave structure that we've got down from this section here is the 1, the 2, the 3, the 4, and then the 5th wave down here is in 5 waves, the 1, the 2, the 3, the 4, and the 5. So we could have a low in here as well. So that that's a real possibility. But just for the time being, let's just consider that it's stable. Let's have a look at this pattern as it emerges from here. Its cousin, the gold here, is on 1700 here, so it's obviously going to be finding some short-term support on the 1700 as well. So what actually happens from the US dollar in the next few sessions, the support or resistance, will also help dictate this as well. We know that the S&P 500 is pushing down, as I mentioned, to the closer to the 1400 there, where it will find support as well. So a lot of these markets are sort of at possible turning points now. So we just need to there won't be any sort of major trends just sort of happening for the time being. There'll be larger consolidations, and that will also be with oil as well, in terms of reaching the 85 here as a minor trading level, and we can expect some further consolidation around this level here as well. So we've had our first little bounce off here. That will run out of steam as it meets supply and then retest the 85 again as well. But even trading lower than the 85 here would still see some type of correction unfolding through here. This correction through here would be at the 86.50, even though it's higher and so forth. But we work the 86.50 if we're working a trade from that point there, the 65 number there. So still it's in a downtrend, but like copper and gold and so forth. But we feel that they're all sort of finding supports in the US dollar at the 80 and the S&P 500. The S&P 500 is actually weak if you did an overlay with the so the Australian dollar, because the Australian dollar is a real good leader within commodities, and that's also rallying quite strong as well, by the way. So that can be leading the markets, quite a few days ahead. So I'm certainly keeping an eye on that. But the S&P 500 is moving down, while the Australian dollar has been moving up, or the S&P 500 has been consolidating sideways, while the Australian dollar has been rallying. Now that the S&P 500 has broken through support, then that might create a short-term or a top in the Australian dollar there, and we'll have a look at that now. Okay, the US dollar, as you know, we're looking for from this strong move down through here, we're looking for a wave 4 back, a corrective move. We know that it's corrective, it's just a matter of waiting for it to finish. This can also be countered in a different way as well. It can be countered because the correction is actually getting quite larger than these here, and wave 4 is like that as well. However, we need to be able to look at it in this way as well. Not that it changes anything in particular, but an A and a B and a C wave here. So we're still looking for the 5 waves in through here, and to complete. It can move technically back up to around 80.50, but it also can be completed now as well. As you know, in looking at the 20-minute chart coming up through here, we've been counting all the little waves up through here, and we think we've got it reasonably right. So we're looking at the 1, the 2, the 3rd wave up to here, and then the 5th wave here. But the 5th wave normally should be the size of the wave 1 here. So it seems to be this a trend to be a trend. Normally what you find is that the volume will expand, and as it moves in the direction of the trend, you'll see that the internal trends get bigger, the corrections get bigger as they move along. So everything is basically growing, and you can see that the correction here is still growing. So we're looking at this trend moving up here, but in fact it's actually still, everything about it is increasing in size. So that tends to suggest that it is in a bullish mode to the upside. So we need to be aware of that. As it counts at the moment, we do have a nice 5 waves to the upside to complete that structure. If I've made an error, then it would be probably within here in terms of this being wave 1 and this being wave 2, and then all of this wave 3 here being a 3rd wave, and this being a 4th wave, and then a 5th wave up there. But the other thing that we can't turn bearish unless this is retested this as resistance here, and that's not the case at this stage. gauge here. So I normally find too that when a market comes up and starts sticking to a number here like this, then it's normally a positive element within the structure. So we need to be mindful of that as well. Normally, if we're trading, we'd trade to the level and get out, and then we wait for it to get support in here, and it is getting support through here. So even though that we're looking at a bearish picture here, it's still bullish at the moment. It hasn't given us any signal that there's a bearish picture developing in this structure just yet. So, but what we can say for the short term is that the price is sticking to the 80, and this consolidation will support commodities and other currencies to a reasonable degree, depending on the pair. So the euro, there's no change in the euro. It's a 2-hour chart here. The move across here at the 130 here that's been unfolding for quite some time, we've understood that it's always been a corrective pattern. We can see that. It could be developing into a triangle pattern, because we're seeing like this structure moving up here was quite a clear 3 waves up here. So that's more like a triangle. So we've got like a little A, B, C here for the A wave, the B wave, C wave, a D wave, and an E wave, all coming across this here. So look, we understand that the pattern is corrective, so we should see new highs here eventually. It's just that, do we have a flat pattern or do we have a triangle pattern through here? We still don't know just yet. The other interesting point is that the US dollar index was dealing with its new highs as such. So when we look at the US dollar index here and look at the bigger picture, we can see that this is dealing with its highs up through here. But the euro's not dealing with its lows down here just yet, around the 128. So we can see that the euro is actually reasonably quite sort of strong. Well, in fact, both of the currencies are sort of strong, really, aren't they? So we can see a migration to paper rather than equities, be it bonds or notes. So look, main point is that it is corrective. It can still come down to the 129 through here, to this support level through here, and that's what we're sort of looking at the moment. So that move coming down through here at the moment, down to the 129 area through here, we've got sort of a 5-wave structure that we're looking at down to here as a wave 3 here, though. We're looking for a wave 4 to move back up. It's bounced quite nicely back up here since I've been working with it. So looking basically for an A and a B and a C through to here, and then once that is done and dusted, then a move down, and that could be it there as well. So the Australian dollar, the CPI figures made it quite sort of gave it some support yesterday. We thought we'd have another little load coming in through here, but that's not the case. So, but we still have a nice 5-wave structure to the downside here, and the 61.8 retracement level is probably in here. The 103.72 here is more like the square root of 61.8, the 78.6 here. So we'll see how that goes there. But I do have to say that this move up through here looks more impulsive, like a 5-wave structure, rather than a 3-wave corrective move in here. So we were looking at this moving down, a corrective move moving back 61.8 in 3 waves, and then moving down through here. It has met resistance through here, but even if it is 5 waves up here or an ABC, it's still going to come back through here, and the idea was to work the 103.50 through that area there. The other thing with this as well is that this is like an expanding pattern as well. So this little pattern in here is a little bit like this larger pattern here. This pattern here is a bit like this larger pattern through here as well. So it does interest me that the 5 waves, if this is a 5-wave structure up through here, then we'll get 3 back through here and then a push up. The other thing too is that, the Australian dollar has really been a leader in the direction of the markets, and so any move to the upside here, it's quite a supportive price action through here, and it's it hasn't taken the bottom of this out here as well just yet. So it's made it corrective to this point here, taking that high out there, but not the next degree of structure. So it could still be a positive picture to the upside there. So we'll just see how we go with that. But tracking this 5-wave structure up here would be the important aspect here. So just to sort of run you through that a little bit through here is that, and also too, the other point is 103 here is the top of group 1. So developing support on here is actually a positive thing in the bigger picture as well. So the move up through here would be something like wave 1 to here, wave 2 to here. This would all be wave 3 all the way up to here, because that's the longest and the strongest in here. So it'll be wave 3 to here, wave 4 to here, and then wave 5 up. So there would be a 1, 2 in here. There would be 1, 2, 3, 4, 5 for the third, for the fourth, and the fifth through there. Just got that on a 5-minute chart here, so you can see it a bit better here. So the 1 and the 2, and then this is all the third wave up through, all the way up through here, and the fourth across to here, and then the fifth wave moving up through here in terms of the 1, the 2, and then the third wave would be the 1, 2, 3, 4, 5, and the fourth wave here, and the fifth wave up through here. So we would be looking, now that the S&P is broken lower, then we would see this move to the downside as well through here as well. So yeah, this morning I could see the prices up here this morning when I was riding it, and the retest of the 103.50 would have been the short trade through here. So now you need to look at 5 waves down through here. So there'll be support on this. There'll be a bounce on the 30 here, the top of subgroup 1 or micro group 1. So there'll be coming down through here, back up through here. So if it moves back up in 3 waves, then you'll know that you're going to get another 5 to the downside. And why the S&P is breaking to the downside, then this will follow. They haven't been following in the last sort of hour. The Australian dollar's been stronger than the S&P, but now that it's had its 5 waves up or 3 waves up, whichever way you can count it, then it should see softer ground. But really there's lots of support coming in around this area through here. So just look out for an A and a B and a C wave through here. If that is the case, and then it finds support back up on the 103 there, then you can go long from that point there. Alrighty, well that's about it. So the Australian markets have been quite resilient, as you've seen, even though we were down. The US was down close on 2% yesterday. The Australian market still came in quite resilient, even though that much of it was down. But the banks are supporting it quite nicely at the moment. Alrighty, well, good morning and good luck.